145%, a number that at first glance might seem like a mere statistic, but when associated with a company like Palantir Technologies, it transcends simple financial reporting. This figure, 145%, isn't just about growth or profit, it signals an extraordinary operational health, a rarity in today's rapidly evolving enterprise artificial intelligence market. We are here to unpack the significance of Palantir's first quarter 2026 earnings report, a disclosure that reveals explosive growth and profitability. Palantir Technologies, a global leader in artificial intelligence operating systems, recently stunned investors and analysts alike with its performance. The key revelation from their first quarter 2026 financial results was an unprecedented 145% Rule of 40 score. For those unfamiliar, the Rule of 40 is a hidden metric often used to evaluate the health of hypergrowth software companies. It combines a company's revenue growth rate with its profit margin. A score of 40% is generally considered excellent for a software as a service business. Palantir's 145% isn't just excellent, it is truly exceptional. The company announced its total revenue for the first quarter of 2026 reached a remarkable $687 million. This represents a substantial year-over-year increase of 42%, significantly surpassing analyst expectations that had hovered around $660 million. This robust growth was not confined to a single area. Revenue from the commercial sector expanded by 57%, demonstrating the accelerating adoption of Palantir's artificial intelligence platform, or AIP, among businesses. The government sector, a long-standing cornerstone for Palantir, also showed strong expansion, growing by 31%, securing critical artificial intelligence contracts that solidify its foundational role. Beyond impressive top-line growth, Palantir Technologies showcased stringent financial discipline. The company reported a non-GAAP operating margin of 41%, underscoring efficient operations and effective cost management. Free cash flow generation was equally strong, reaching $212 million, which translates to a free cash flow margin of 31%. These figures highlight Palantir's ability to convert revenue into tangible cash, providing robust liquidity and strategic flexibility. Earnings per share for the first quarter 2026 stood at 12 cents per share on a non-GAAP basis, outperforming consensus estimates by 2 cents. This consistent outperformance reflects Palantir's strong operational execution and its capacity to exceed investor expectations. Furthermore, the company reinforced its robust financial health by reporting a cash and equivalents balance of $4.3 billion. This substantial war chest emphasizes Palantir's liquidity and its capacity to invest in future growth initiatives, whether through research and development or strategic acquisitions. Now, let us delve deeper into the Rule of 40 score of 145%. This figure is not merely a sum, it is a powerful indicator of Palantir's unique position within the enterprise artificial intelligence market. It is derived from the 42% revenue growth combined with an astounding 103% non-GAAP free cash flow margin. Yes, 103%. This blend of rapid expansion and exceptional profitability makes Palantir Technologies an undeniable standout. It illustrates how the company is not only capturing significant market share, but doing so with remarkable efficiency. This 145% is a testament to Palantir's effective strategy in driving artificial intelligence adoption at scale. This extraordinary Rule of 40 score matters profoundly because it paints a more comprehensive picture of Palantir's health than individual revenue or earnings figures alone. It tells us that Palantir is not merely growing, it is growing profitably, sustainably, and at a pace that few, if any, other companies of its scale can match in the artificial intelligence sector. Understanding why this 145% is so critical and what it truly signifies for the future of enterprise artificial intelligence will be the focus of our continued analysis. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. Understanding why this 145% score is so critical requires a deeper look into the operational engine driving Palantir Technologies. The impressive numbers we have just detailed are undoubtedly significant, but how exactly did Palantir achieve this unique blend of explosive growth and profitability in a challenging market, one that often forces companies to choose between expansion and financial discipline? This question leads us directly to the core mechanisms of their success. Ad break placeholder. One of the primary drivers behind Palantir's accelerating performance is the widespread and growing demand for enterprise artificial intelligence. Companies across every sector sector are actively seeking robust data infrastructure solutions to leverage artificial intelligence effectively. Palantir's Artificial Intelligence Platform, or AIP, is perfectly positioned to meet this demand. It offers a comprehensive operating system that integrates diverse data sources, enabling organizations to build, deploy, and manage artificial intelligence models at scale. The market is increasingly recognizing that artificial intelligence is not just a technological enhancement, but a fundamental shift in operational paradigms, and Palantir is seen as a key enabler of this transformation, a pivotal element in Palantir's strategy, and indeed a significant contributor to its exceptional first quarter 2026 results is its distinctive sales model, the AIP Bootcamp. Unlike traditional software sales, which can involve lengthy procurement cycles and complex integrations, the AIP Bootcamp strategy focuses on rapid, hands-on deployment. Over 5 days, Palantir engineers work directly with a client's team, immersing themselves in their operational challenges and demonstrating the tangible value of AIP in real time. This approach drastically shortens the sales cycle, moving from proof of concept to production in a matter of days or weeks rather than months. It allows potential customers to experience the direct benefits of Palantir's artificial intelligence operating system, transforming skepticism into adoption and generating immediate return on investment. This bootcamp model also fosters a highly scalable software delivery mechanism. By empowering clients to use AIP quickly and effectively, Palantir creates a path for widespread internal adoption within an organization. This process not only secures initial contracts, but also encourages organic expansion of the platform across different departments and use cases. The result is a growing footprint within client operations, creating deeply integrated relationships that are difficult for competitors to dislodge. Furthermore, Palantir's consistent expansion within the government sector continues to be a strategic bedrock. In the first quarter of 2026, the 31% growth in government contracts underscores the critical importance of Palantir's artificial intelligence capabilities for national security and public sector operations. Governments globally are investing heavily in artificial intelligence for defense, intelligence, and logistical applications, and Palantir has established itself as a trusted partner due to its robust security protocols and proven track record with sensitive data. These long-term, high-value government contracts provide a stable revenue stream and validate the sophistication of Palantir's technology. This deep integration, both within commercial enterprises and government agencies, creates a formidable structural moat around Palantir's business. Once AIP is embedded within a client's core operations, powering critical decision-making and artificial intelligence applications, the switching costs become extraordinarily high. Replacing Palantir's platform would entail significant disruption, data migration challenges, and the rebuilding of complex artificial intelligence workflows. This stickiness ensures customer retention and provides a strong foundation for recurring revenue, making Palantir a defensible leader in its market niche. For those bullish on Palantir Technologies stock, the arguments for continued hypergrowth are compelling. The company rides significant artificial intelligence tailwinds, benefiting from the accelerating digital transformation and the universal need for data-driven insights. Its unique AIP Bootcamp sales model offers a distinct competitive advantage, allowing for rapid market penetration and expansion. Combined with its leadership in mission-critical artificial intelligence solutions for governments, Palantir is well-positioned to capture a substantial share of the burgeoning enterprise artificial intelligence market. The 145% Rule of 40 score is a clear testament to this strong operational momentum. However, a bear case for Palantir Technologies also exists, and it largely centers on valuation concerns. Despite the impressive growth and profitability metrics, some investors argue that the stock price already reflects much of this future potential, leading to a high valuation in a market that can be fickle. Additionally, while Palantir's current market position is strong, the artificial intelligence landscape is highly competitive, with established tech giants and innovative startups constantly vying for market share. There is always the potential for new entrants or disruptive technologies to challenge Palantir's dominance. Furthermore, dependency on large, complex contracts, particularly in the government sector, can introduce an element of lumpiness to revenue, though this is mitigated by the increasing diversity of its client base. The data unequivocally supports the effectiveness of the AIP bootcamp model. The rapid expansion of commercial revenue by 57% in the first quarter of 2026 directly illustrates how this hands-on approach is converting prospects into long-term clients with remarkable efficiency. These figures paint a picture of a company not just selling software, but actively partnering with clients to solve their most complex data challenges, cementing its position as a foundational provider in the enterprise artificial intelligence ecosystem. Following the announcement of Palantir Technologies' stellar first quarter 2026 results, the market responded with significant positive momentum. PLTR stocks surged in immediate trading sessions. This uptick reflected renewed investor confidence, not only in Palantir's ability to exceed financial expectations, but also in its strategic direction. The extraordinary 145% Rule of 40 score acted as a powerful signal, validating the company's unique blend of rapid growth and robust profitability. Sentiment shifted, emphasizing Palantir's execution and growing dominance in the enterprise artificial intelligence space. These results did more than just boost investor confidence. They underscored Palantir's critical role in shaping the future of enterprise artificial intelligence adoption and data infrastructure. As more organizations grapple with integrating artificial intelligence effectively, Palantir's Artificial Intelligence Platform, or AIP, is increasingly viewed as the foundational layer for complex data environments. The company's success demonstrates a clear path for other firms navigating the artificial intelligence transformation, highlighting that strategic partnerships and integrated solutions are key to unlocking true data value across industries. This positions Palantir as a bellwether for the broader artificial intelligence sector. It is crucial to recognize Palantir not merely as a software application company, but as a foundational infrastructure provider. Unlike traditional software vendors offering specific applications, Palantir's AIP functions as an operating system for data, allowing disparate systems to communicate and artificial intelligence models to be built and deployed at scale. This strategic repositioning is vital for understanding its long-term potential. Just as electricity grids provide power or operating systems offer platforms, Palantir's AIP is becoming an indispensable utility for modern data-driven enterprises. It builds the tracks upon which all other artificial intelligence applications run. Historical parallels show that companies building fundamental infrastructure often achieve enduring dominance. Think of early railway networks connecting vast regions, or electricity grids powering entire nations. In the technology realm, giants like Microsoft, by providing the ubiquitous operating system for personal computers, established a lasting market position. Oracle, with its foundational database technologies, similarly became an indispensable component of enterprise information technology. Palantir's deep integration into client operations and its role in democratizing access to sophisticated artificial intelligence capabilities for decision-making aligns it with these infrastructure pioneers, creating a strong defensible moat and high switching costs that are difficult for competitors to overcome. Looking ahead, Palantir's trajectory suggests continued expansion into new verticals and deeper integration within existing client ecosystems. Potential next steps include venturing further into specialized artificial intelligence solutions for niche industries, enhancing its platform with more advanced predictive analytics, and potentially expanding its global footprint. However, the anticipated competitive landscape remains a significant challenge. While Palantir maintains its unique position, the artificial intelligence space is dynamic, and continuous innovation will be paramount to fend off threats from both established tech giants and agile startups. Maintaining its lead will require persistent investment in research and development and a continued focus on customer success. Many investors focus solely on quarterly revenue or earnings per share, often miss the profound implications of Palantir's 145% Rule of 40 score. This metric captures the synergy between growth and profitability, indicating not just rapid expansion, but also efficient resource utilization. It highlights that Palantir is not burning capital to chase growth, but rather achieving sustainable, profitable scale. This fundamental operational health, combined with its strategic repositioning and unique sales model, often gets overshadowed by short-term valuation debates. Understanding this score provides a clearer, long-term perspective on Palantir's intrinsic value. If you found this deep dive into Palantir's exceptional performance insightful, please consider subscribing to our channel and liking this video. Your support helps helps us continue providing analytical insights on hypergrowth software and enterprise artificial intelligence. Next time, we might explore a comparison between Palantir and other major artificial intelligence players, or delve into the ethical considerations surrounding large-scale artificial intelligence deployments. We are eager to hear your thoughts. Share your opinions on Palantir's unique sales model, the significance of the Rule of 40, or the future of enterprise artificial intelligence in the comments section below. Ultimately, Palantir Technologies' 145% Rule of 40 score for the first quarter of 2026 is more than just a number. It is a definitive statement of its current strength and formidable trajectory within the evolving artificial intelligence landscape, bringing the narrative full circle.